Bitcoin is over $1 trillion, almost 2 trillion, and Ethereum is 200 something billion. Okay. And those are the two largest. So let's say combined under 2 trillion. Gold is 22 trillion. The stock market is over 100 trillion. Real estate's like 300 trillion. But here's the thing. All of those other assets, to make them composable and monetized and digitized, you're going to have to run it on Ethereum and other blockchains. And if Ethereum is at 300 billion, it's grossly undervalued. So to me, should Ethereum be $1 trillion or $2 or $5 trillion network value? Yeah, I can easily see it in the next few years.
$216 billion. That's roughly where Ethereum's network value sits today. But according to Fundstrat's Tom Lee, the market is making a massive mistake. While most investors are focused on short-term price action, Lee is looking years ahead, and what he sees is an entirely different future. A future where trillions of dollars worth of assets move onto blockchains. Autonomous AI agents transact with one another, and Ethereum becomes the financial infrastructure powering it all. In his view, Ethereum isn't expensive, it's dramatically undervalued. Now, that might sound surprising, considering how disappointing crypto has been lately. Bitcoin has struggled to keep pace with AI stocks. Ethereum has spent years trapped below its previous highs. Sentiment has been battered, capital has flowed elsewhere, and many investors are beginning to question whether crypto's biggest opportunities have already passed. But Tom Lee believes that's exactly why the market is missing what's happening beneath the surface. His argument isn't based on hype, it's based on infrastructure. Tokenization is accelerating. Stablecoins continue setting new records. Institutions are quietly building on-chain. Artificial intelligence is rapidly moving toward autonomous economic agents, and according to Lee, these trends don't compete with Ethereum, they increase its value. While the market remains obsessed with today's headlines, he believes the foundations for the next multi-trillion-dollar crypto cycle are already being built. If Tom Lee is right, then today's weakness isn't the end of crypto's story, it's simply another chapter before a much larger expansion. In this video, we'll break down why he believes crypto has lagged despite favorable macro conditions, why Ethereum continues to underperform Bitcoin, why AI and blockchain are becoming inseparable, and why he believes Ethereum could eventually be worth multiple trillions of dollars. If you enjoy macro investing, crypto analysis, and long-term market insights backed by real fundamentals, make sure you hit the like button, subscribe to the channel, turn on post notifications so you never miss an update, and let's dive into Tom Lee's bullish vision for Ethereum and the future of digital assets.
Why is crypto in general lagging behind with everything that's currently going up in the market?
If you asked me a year ago if AI stocks were going to go up a lot and software was going to start to rise and there was like a war, I would have said those three things should have been good for crypto, right?
Actually, yeah.
Right, because we'd be like, well, yeah, because AI is clearly good for crypto because crypto is going to be important for the agentic future. And we'd say that, well, crypto stocks are correlated to software because it's digital money, right? Money, software money. And software has done well, but crypto's done badly. And, in wartime situations, we should expect to see gold and Bitcoin do well. But instead, as you point out, crypto's done really badly. And gold's done pretty poorly too. I think it tells me a couple of things. One is I think crypto still hasn't recovered from October 10th because that's really when the industry broke. And I think there was so much deleveraging that took place there that it wiped out a lot of people. I mean, I just think people lost money and they can't come back. And that takes time because people have to rebuild their savings. And I think the second is that money flows isn't explaining why stocks are going up. Because if that was the case, gold should be going up as people worry about war because there's all this cash on the sidelines and they should be holding stores of value. But instead, I think investors are buying whatever goes up because there's not enough yield. Right. Yeah. So AI stocks go up and memory goes up. And so it's an efficient use of money to allocate to that because you're not getting yield anywhere.
Isn't it also because by definition, as AI is coming in, a lot of people have a very short time frame of investing appetite at this point, and they just try to jump on a bandwagon to get some return, and they don't have a long-term vision anymore.
I mean, yes and no. I mean, you know, I spent half my career studying technology, and to me, the technology story behind AI, is multi-decade. Like, we can see the use case, and then we can see the infrastructure that needs to be built, and then we see that the companies that have shortages, like supply, memory, and power, right? They're selling something that's scarce. Those stocks are doing very well because the earnings are doing well. So I don't think it's irrational, but the fact that you are correct in the sense that AI, if you're buying AI, you should buy the whole ecosystem, but people are just buying like what's in shortage right now.
Yeah, correct.
Right. I think if you look at the roadmap for AI in the next 3 years, I think a couple of things are pretty certain. One is we're going to delegate authority to agents to be economic agents for us. Like, so they'll interact with websites and carry wallets and make payments. Like, that's guaranteed, because today they can already interact with travel sites and use your account, but we'll delegate authority to them. I think that autonomous capabilities of robots and cars are going to vastly increase. And if you think about robots, that means pretty soon robots will have warehouse skills that exceed a human. Okay. But that also means like robots may autonomously start building entire buildings. Like, they might do construction for us. And then cars will get a lot more capable. And then the next step beyond that, of course, is that there's going to be agent to agent commerce or machine to machine commerce, right? So all that on like a million machines, right? I mean, I'd say probability of all those three happening in the next 3 years is like pretty close to 100%.
Yeah.
But today, the infrastructure doesn't exist to handle all of that. Because if you have machine to machines and delegated authority, you can't rely on Amazon to control that robot, because all of a sudden Amazon essentially is controlling a whole population of workers. You need to have a democracy of like these agents. And that's where I think crypto, of course, plays a role.
So what is required to actually get to that agentic economy, in your opinion?
There's going to be two approaches, right? Someone's going to want to control everything. So it's going to be one company that tries to set the standards for all the robots to talk, because the delivery robot is not the same one that does the driving.
Yeah.
And that's not the one that has the payment system at the restaurant. And that'll be a centralized solution. But then someone could hack that, or that company could become evil. Then I think the other way, of course, is to create a desire for people to have a trust layer that's anonymous. And that's pretty much blockchain, right? So I think that'll be the two approaches people take. I don't know which one's going to win. I would say that, everybody but the monopolist would probably want a decentralized solution.
Tom Lee's explanation offers a very different perspective from the narrative dominating today's market. Instead of blaming weak fundamentals, he argues that crypto is still recovering from a brutal deleveraging event that permanently shook investor confidence. At the same time, capital has rushed toward whichever sectors are producing immediate earnings growth, particularly artificial intelligence, while crypto's biggest catalysts remain a little further down the road. That disconnect has created frustration for investors, but in Lee's view, it has not changed the long-term investment thesis. In the next section, Lee shifts his focus specifically to Ethereum. He explains why its prolonged underperformance against Bitcoin has less to do with weakening fundamentals than many believe. More importantly, he outlines the three structural forces that he believes will eventually redefine Ethereum's valuation, from AI-driven machine economies to tokenized financial markets and the growing importance of decentralized trust. It's this broader framework that leads him to one of his boldest predictions yet.
Well, I guess there's a couple ways to look at it. There's Ethereum price itself against dollars,
There's
Or-
fundamental growth.
Yeah, or Ethereum's price against Bitcoin. It hasn't done well either way. And I think part of it is the reason it hasn't done better against Bitcoin is that the Ethereum narrative is kind of in transition. Because there was a story a year ago where investors and crypto holders were excited about Ethereum because they saw a recovery in sort of the foundation's focus on enterprise engagement,
Mhm.
And so it was like the Ethereum Foundation was trying to do things that would make Ethereum price go up. And but I think in the past year there's been a bit of narrative drift because other protocols have done a good job of like some profile wins like Canton and Solana. And I think the Ethereum Foundation is correctly though shrinking its role. Like they are in the midst of restructuring to an extent or streamlining.
Mhm.
But that's a narrowing of its focus, and that is helping confuse people who own Ethereum. But I do think these aren't things that really make Ethereum less valuable. I think it's, if anything, it just shows you that the crypto market, the narrative for the whole crypto market itself hasn't been great, right? Because
Correct, yeah.
Bitcoin's done poorly, and a lot of this is after October 10th. So I think investors have money flows have reversed. And I think the AI story is maybe further out than people hope. And the tokenization story, like it's still really relevant because stablecoins are doing well and banks are experimenting. But we haven't seen a big transfer of actual financial services activity onto the blockchain.
That's
And
correct.
maybe that'll happen after Clarity Act, but that means the reason Ethereum sort of has underperformed is really not as much the foundation, which people think it is. It's more because the two legs of the story, AI and tokenization, are maybe a little further out than people thought.
What's the narrative that Ethereum needs to catch up on? Is it going to be more of an institutional drift driving the entire layer upwards, or?
I think I think there's three legs to the Ethereum story. One is, I think it's in the future, people are going to really value neutrality and decentralization. Like that's going to be a virtue, because they don't want a blockchain that has like 7 nodes or it's only in one country, or there's two entities that own 30% of it, because that's not a decentralized protocol. And especially, it's going to be, especially when machine to machine interacts, everything people going to want a say in finality, and that's where blockchains are going to be important, because you don't want a company to actually control that. The second is tokenization. I mean, it's not even a question. Everything that happens today in the financial system can be done on the blockchain more efficiently, but all the customers are still on the traditional financial rails, right?
Yeah.
So, that's not going to happen overnight. But I think the third story that's really bullish for Ethereum is it's actually been around so long, and the Lindy effect is a good argument that it's really time for like the industry to organize to supplement what the foundation does. And I think it's really the only blockchain that actually is like that mature, and it's that collaborative to be able to do that like that. That hasn't happened on Bitcoin, and no other blockchain's been around 11 years beyond that. So
Ethereum basically had it in 2016, 2017 with the first like ICO escape velocity hype, and then 2021 there was another big run taking place.
yeah,
And now we're stuck in a range for 5 years, waiting for the next wave to come. What do you think is going to be that one, and how long do you think that is going to take?
Oh, well, first of all, the upside's pretty big in a sense because look at network value. Bitcoin is over $1 trillion, almost 2 trillion. And Ethereum is 200 something billion. Okay. And those are the two largest. So let's say combined under 2 trillion. Gold is 22 trillion. The stock market is over 100 trillion. Real estate's like 300 trillion. But here's the thing, all of those other assets, to make them composable and monetized and digitized, you're going to have to run it on Ethereum and other blockchains. And if Ethereum is at 300 billion, it's grossly undervalued. So to me, should Ethereum be $1 trillion or $2 or $5 trillion network value? Yeah, I can easily see it in the next few years. So I think there's a lot of upside. Yeah. I'm pretty confident about the price upside.
Tom Lee's outlook ultimately comes down to one simple idea. Markets often price today's emotions instead of tomorrow's realities. Right now, investors are rewarding businesses benefiting immediately from the AI boom, while overlooking the infrastructure that could eventually support an entirely new digital economy. That's why he believes Ethereum's current valuation tells only a fraction of its future story. As AI agents begin managing wallets, executing payments, negotiating services, and interacting directly with one another, the need for neutral, decentralized settlement becomes increasingly important. Add to that the continued growth of stablecoins, the gradual migration of financial assets onto blockchain networks, and the increasing demand for tokenized real-world assets, and the long-term opportunity begins to look far larger than today's market capitalization suggests. Of course, none of this means the journey will be smooth. Adoption takes time. Institutions move cautiously. Regulations continue evolving. Narratives shift. Markets cycle between optimism and fear. But throughout the interview, Tom Lee repeatedly emphasizes that these delays don't invalidate the investment thesis, they simply postpone when the market fully recognizes it. His conviction is that the foundations are already being laid, even if prices haven't yet reflected that reality. Whether Ethereum ultimately reaches $1 trillion, $2 trillion, or even $5 trillion in network value remains to be seen. But if Lee's vision of AI, tokenization, and decentralized infrastructure plays out over the coming years, today's valuations could eventually look surprisingly small in hindsight, for long-term investors willing to look beyond the current cycle. That possibility is exactly what makes this period so compelling. In many ways, Tom Lee believes we're not watching the end of crypto's story, we're witnessing the early stages of what he calls crypto's next spring. If you enjoyed this breakdown and want more in-depth analysis from some of the biggest names in crypto and macro investing, please leave a like, subscribe to the channel, and turn on post notifications so you never miss our latest videos. Thanks so much for watching, and we'll see you in the next video.